Quite a story here. This is from Bloomberg saying Wall Street talk of revaluing U.S. gold is drawing attention and skepticism. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we are picking up coverage in the gold and silver markets once again on a Wednesday afternoon, where just a little bit after noon time on the East Coast, we see gold a little quieter today, down $5 after obviously there was the big move yesterday. Pretty close to a $50 move in the gold market. Not quite as much on silver, where here down 29 cents today. Also, you see that, I mean, here we are back on Monday. So 32.70-ish, still a little bit higher over the $33 level. And again, as I've been mentioning a lot, I don't know if you read the Substack that we've created, the gold and silver daily.substack.com. But I mentioned in there quite a bit that, especially with the things that we're talking about that are going on in the market, to some degree, be prepared for this type of volatility. I wish I could say, you can buy your silver and it's just going to go straight up like an elevator. Gold, in some ways, you do have at least that possibility if there is a revaluation, which we are going to get into in just a moment. Silver, you have an outcome like that could occur if we do actually run into a shortage at some point, which would not say we're there yet, but certainly as the years continue to go by with the deficits and declining inventories is becoming a possibility. And we'll have a note before we wrap up about some of the deficits. So anyway, again, point being, it's not going to go straight up. And especially when you have some of the conditions like we have in the markets right now, which seem to be set to continue. So therefore, it may be wise to be prepared for volatility. And if silver is up a dollar one day, down 80 cents the next day, um, don't be surprised. And as someone who used to let that affect my day far too much, just something to keep in mind. Here we can see the 10-year yields back down to 455, or as they called it on the trading floor, four double. And you see a bit off of the highs when it touched that 480 level back on January 13th. So obviously, as the Trump policies being implemented, discussed, talked about, unimplemented, then said maybe a month from now, certainly not surprising that we have the volatility there, or that the dollar index, which did get over 110, there you go, 110 and a penny back right around the time when we saw the spike in bond yields that I just showed you. And off of those highs, still over the 107 level. And again, remember, you probably heard me say this before, but back in, I think it was the day before the Fed did that 50 basis point cut in September, it was just under par, so right below the 100 level, and shot up 9% as the Fed was cutting rates aggressively, which they backed off of, yet may do as growth is slowing, yet, and Trump wants, yet they don't want to do because inflation is rising. And basically, I guess if you listen to gold and silver people, that's what we've been warning about 15 years ago for me, many more years for some others. But now you're seeing some of that start to happen. So anyway, as I promised with the title in today's intro, quite a story here. This is from Bloomberg saying Wall Street talk of revaluing U.S. gold is drawing attention and skepticism. Well, I mean, again, when Scott Bessent says what he did about monetizing the assets on the U.S. balance sheet, what do you expect people to say? And that, again, because Wall Street's attention is on it, does that mean that it is going to happen? Of course not. But what I would say is that if their attention is on it, could that lead other parties to buy gold? Now, that's certainly possible. And in either case, just interesting day and age we're in, where Bloomberg is doing articles about a gold revaluation. As you may have heard me mention before, last year the Philadelphia Federal Reserve did a study on the gold standard and if that would stabilize prices. Came to the conclusion that it would. And obviously, we have Judy Shelton talking about the gold-backed bonds. And here, course, the gold market always got to throw the fringe ideas in there. Come on now. But the idea isn't under serious consideration among U.S. President Donald Trump's top advisors, according to a person familiar with the matter. Now, I don't know people personally who are familiar directly with it, but I have heard people in well-known publications speculate that they are talking about it. I think it's very possible that they could be. They have not called me to confirm that. But anyway, some gold market participants, they talk about Scott Bessent's comments. And then let's get down here because we have this idea from Stephen Moran. I said, wow, that sure sounds like one of the worst ideas I've heard in my life because he says, by selling well, basically, Stephen has floated the idea of selling the stash, and by selling the gold for dollars and then exchanging those dollars for foreign currencies, the administration would strengthen undervalued currencies, an outcome Trump has signaled he wants. Wow, so now we're going to sell the gold for other currencies that are being debased. I get what they're saying there, so that they can devalue their currency and have the other currencies appreciate and they can export more, which I get that there's a school of thought for that approach. The idea of selling the country's gold to do that, obviously, I think, is not my first choice, but still just that they're going to do it and buy other crappy currencies. That's a little disconcerting. So anyway, if you want to find this one, it's reposted on Yahoo because Bloomberg does require a subscription. Kind of a pricey one, not a bad one, but anyway, Wall Street talk revaluing U.S. gold is drawing attention and skepticism. If you go for that headline, and if you if you want to see what people responded to my thoughts on the matter, there's James Anderson saying good luck with that, and we'll see how that goes. But anyway, I'm gonna go through quickly some news that's coming out. A lot of stuff happening. It's not a boring time for gold and silver. Yesterday on the live show we did with Matt Riley, that in case you missed it, I will link to that at the end. But he was talking about how Arger Heraeus had added $3 premiums to their silver products in a press release. They said there that the inflation plus even before the tariffs have gone into effect, the impact of that has led them to put a $3 premium on their silver minted products, and they are a large refiner. And here, in addition, Arger Heraeus has suspended the production of 50-gram and 100-gram minted gold bars, as well as denominations of platinum minted bars until further notice. So again, there's sometimes where there's prices going up. There's sometimes where you have things like this where does not necessarily say that metal isn't there, but now things are getting clogged up. Also is not saying that we can rule out that metal is not there because there is a lot of speculation that there is a bigger issue with the London gold supply and that this isn't just a matter of tariffs. I wish I could tell you conclusively one way or another, which definitely is. My guess is some combination of all of the above. But anyway, you're seeing signs there. And here we have, this is from Craig Hemke's column. That's where I saw that additional suspension of some of the minted products. Plus, now we're cleaning out Singapore Gold 2 and gold market ruction, spur spike in Singapore exports to the U.S. Gold shipments from Singapore to the U.S. reached 11 tons in January, the highest level in almost 3 years, up 27% from December. And of course, as I'm sure many of you have heard by now, we did have banks halt the sales of silver bars in Korea. That came out late last week. Again, I'm not well versed on the silver supply chain to Korea, so hopefully this is coming out clearly when what I'm expressing, that there's some degree to which sometimes different businesses are getting affected in different ways, so your supply chain is off. But again, there is also the chance that things are getting quite tight, and certainly something we will keep an eye on with that one. And also in terms of U.S. retail activity, You may remember Brian Kuzmar, who runs a coin shop down in Lauderdale by the Sea, not too far from where I am in Florida. And he put an update here, and we'll go through this real quick. Retail buyer activity increases. Over the past month, they've seen a noticeable uptick in retail buying, particularly from investors with substantial capitals making six-figure purchases, although premiums remain really low. And in contrast, little capitulation from seasoned investors or solid hands, although there, by what he calls the weak hands, there is some selling. Here you go. The dealer actions. They're offloading excess inventory primarily to manage cash flow, which should not be confused with capitulation from retail stackers. Did hear Bob Coleman mention that in an interview recently. And a noticeable increase in premiums for gold kilo bars, as well as silver 1,000 ounce and 100 ounce bars, which Matt mentioned yesterday, some of the premiums going up, although conversely, premiums on retail products like Silver Eagles have fallen. Retail sales remain subdued. And anyway, again, if you have not heard the call with Matt that we did yesterday, he goes into some more of the dynamics on the retail level. Quick note from Bai Jun over in China, the not SLV, the silver inventory of the Shanghai Futures Exchange set a record for daily outflows, reaching 193 point, not 193,000 kilograms. So metal on the move. Maybe a little early to say exactly what's behind all of these, but some data points to keep an eye on. Meanwhile, Silver Institute recent publication, this came out on the 29th, and they mentioned that the deficit to remain sizable in 2025. And in their recap here, yeah, here you go. Forecast remain in deficit for the fifth year running, although expected to fall by 19% to 149 million ounces. Obviously, that's still large, and I would say perhaps, especially with what's going on right now, there's the possibility that a lot of things could change in the remaining months of this year, but at least that is their projection. Here, Luke Roman mentioning something that I've said many times that I wondered about, although certainly I read and listen to a lot of what he does, and has furthered my conviction in that belief. I wouldn't go trading on that, but I think more likely to be the case than not that, as he mentions, if we cut spending by 10 to 35% without devaluing US debt dramatically first, such as revaluing gold and buying back debt, cutting everything by 10 to 35% math is mathematically guaranteed to drive a decline in GDP and a blowout of the deficit from 7% of GDP to 12 to 15% of GDP after the cuts. I find Luke to be quite thorough. Highly recommend his Forest for the Trees subscription service, where I'm sure he goes deeper into the numbers there. But I do think that he is very likely to be correct. I know there are other views out there, but that's from Luke. Another one, this came out a few weeks ago, but Doge team discovered, among other things, that payment approval officers at the Treasury were instructed to always approve payments, even to known fraudulent or terrorist groups. They literally never denied a payment in their entire career, and not even once. I've also heard the Pentagon, I'm pretty sure, has never passed an audit. I won't go into Rumsfeld and his proclamation of 2.3 trillion on September 10th. Which for any of those accuracy buffs out there, yes, I know they had been talking about it previously that summer. That wasn't the first time he mentioned it, but anyway, yeah, I'd love to get some answers there. And also, I might add, we did have one of our viewers write in and mentioned certainly he wanted to see them understand some of the things that have been going on in the gold and silver market. Obviously, there's that speculation that they may look into what's going on at Fort Knox, which would be quite interesting. But if you wanted to see if you can write in, and if you wanted to present evidence or tell them anything about gold and silver and what you have observed, there's the page. And what's this at x.com/Doge. So it's just Doge is their handle. And also, I will put this link in the description field. Here is a page we've set up, and has a bunch of different pieces of evidence. a few things that we submitted to the CFTC, a bunch of different links here. I was a little more feisty back in those days, and sometimes I think back, I part of me that might want to reword some things yet. So either case, though, at least the information is there if you want to take a look through it. And a few last notes before we wrap up. Trump has also said the U.S. may have less debt than thought because of fraud. Hmm. Well, if I were digging into that one, or maybe I'll tell the Doge board to look into the Black Eagle Trust Fund. I wouldn't claim to know exactly what has happened with the Black Eagle Trust Fund, although I've read many things, including there is an assertion. I've not been able to confirm how accurate this is, but basically that the older Bush, basically they took out 240 billion of bonds that were allegedly used to overthrow the Russian economy back in 1991 that were coming due on September 12th, 2001. So who knows what happened on September 11th with JFK? Maybe we'll get some answers to all these things, although it's odd he's saying that we're finding fraudulent stuff. Could be a lot of these things that don't count. Therefore, maybe we have less debt than we thought. Not sure how that would work exactly, but that's what I know about it so far. And if you've heard more, leave a comment and share it with people. Obviously, last week we also had he's going to stop minting pennies, which actually makes a lot of sense. And anyway, exciting times out there. So, hope this was helpful. Tried to keep it quick and moving today for you. And also just let you know that it was brought to you today by Fortuna Mining, that obviously we do those regular calls with them and have been following them for quite a while. They did have record attributable earnings in the past quarter, and they do have their earnings for the fourth quarter and the full year of 2024 coming out on March 5th with a conference call at noon Eastern that day. I would imagine we will probably be doing a call with Jorge on the show that week as well. I'm not entirely sure yet, but I will keep you posted as we get closer. But they do have their earnings coming up. And again, I mentioned they did have record attributable earnings in the previous quarter. And we've had the higher gold price, which also seems to be shaping up nicely for the gold miners in the first quarter as well. And anyway, March 5th, so especially for you Fortuna shareholders, circle that on the calendar. It'll be fun to see how things went. With that said, I will wrap up now. But like I mentioned, if you didn't hear the call with Matt Riley yesterday, where he talked about what's been going on with the BRICS and Trump threatening to kick out anyone who de-dollarizes, well, that one is coming your way now.